Hey, what's up, you guys? Happy Friday, TGIF, right? Welcome to the 2016 NFL season. Big kickoff last night between Denver and Carolina. Denver coming out on top again, just like the Super Bowl. Pretty amazing. Well, anyway, before we get the weekend, I wanted to talk about the market today because it was pretty crazy. It was amazing. We got a huge sell-off today in the markets, fairly broad. So I have up on your screen several things. In the top left-hand corner, I have the IWM. I have top right-hand corner is GLD. Um, Bottom right-hand corner is TLT, which is our 20-year bond ETF. And in the bottom left-hand corner, we have the S&P 500. Actually, the SPY, which is the Spider ETF tracking stock for the S&P 500. So if you look right here, here's the big sell-off. And as you can see here, we really have not done anything for the last 2 months. So finally, we're getting some action. And look at this. Look at this big spike of volume. Awesome volume. So the question now is, where are we going from here? There's only two ways to go, up or down. You may have heard the common phrase that if something bad happens on Friday, it's going to lead to something bad on Monday. So if something bad does happen on Monday, where are we going? So first of all, let's look at our levels here. So right here we have the volume profile for the SPY, which is why I have SPY instead of the S&P 500, because the index itself does not have any volume associated. So we wouldn't be able to see this big spike, and we wouldn't be able to have this volume profile right here. So using the S&P or SPY, we can see the volume profile. See, it's got a really big spike here, and then it goes down, and then it spikes back up again, and down, and then spikes again, and comes back down here around 180. So the things we're interested in are right here. So the dips in the volume. So there's a volume dip right around the level where we are right now. So this is, 213-ish, which corresponds roughly to 212 in the S&P 500, because that's about where we finished, 212, 213. So you'll probably find some support here. So that means that we could have a little bump on Monday. However, with such a strong move today and this huge volume, I would tend to think that you may have to look for the next area of support. And because we've already crossed through the level of our previous highs of 2134 on the S&P 500. So since we've crossed that, I think that's a major barrier. So we're back down below the new highs previous to when we made the new highs. So what's our next level? So I think our next levels, there are several of them. So 210 or 2100 on the S&P 500 or 210 on the SPY would be an important level. Right here on SPY, this is about at 206-ish. This is our 200-day moving average. Let me tell you exactly where that is. So it looks like it is right about at 206. 205.76 is where the 200-day moving average is on the SPY. So that's where we would be looking. If we look at the actual index of the S&P 500, the 200-day moving average is at 2057. So right in that range is a big area of support, right? 2050, right in that range is a huge area of support. So if we drop lower on Monday, next week you may find us down there around the 205 level on the SPY or 2050 level on the SPX. Also, yesterday or yesterday or last week, I was talking about an indicator that I like to go by. It's a three-pronged indicator, a short term, a medium term, and a long term. Longer term, I guess. They do overlap some, but anyway, the short-term indicator has a lot to do with positioning and how people are positioned in the market. So today, looked at my indicator again, and actually, the interesting thing is it's not a whole lot more bearish than it was last Friday. You remember if you listened to my video last week Friday, it was starting to get bearish. So it hasn't moved much actually. So it's not extremely bearish. So if we were to dip down to the 2100 level, I would probably start buying. If we got down to the 2050 level, I would probably start buying more. Because unless my indicators start getting more and more bearish, at this point I would buy the dips. And there are a few things that may confirm that as well. So hence, these additional charts that I have up, in the top left-hand corner is IWM. So as you can see right here, pretty nice chart. Just kind of going up, much better than the S&P 500 here was just kind of flat for the last 2 months. Whereas the small caps, the Russell 500, doing pretty well, moving on up. So the pullback here was just about to the 200-day moving average. So with the Russell, some people say that the Russell 2000 is a leading indicator for the overall market. Well, it looks to be doing pretty well. So it's possible buy here right at the 200-day. We have a volume profile here too, and our support level is right about here at 118 or so. So those are the levels that I'm interested in, at least for now. And then on the top right-hand corner, we have GLD, and I've made some lines here in red. You can see that GLD is back right in the middle of this range. So I'd expect it probably to get back down to 125. And if you look down here, the MACD has been downward. This whole channel really has been kind of downward. If we zoom out, this is a 3-year weekly chart. You can see that there's probably going to be a pretty good area of support here at about 124, 125. If we cross that, I'd probably be looking for around 115. So really 115. And if you follow the stock market, you'll realize that things like to be fairly symmetrical. So even if we go farther out, so this is a 10-year chart. If you look right here, the downtrend ended last December. And in order for this to be it's a good reversal pattern already, it's sort of almost like a little double bottom here. But what I'm looking at is this area right here was fairly prolonged. We had a good 1.5 to 2 years of this decreasing triangle before we bottomed out down here around 100 on the GLD. So you would expect that the rise would be roughly symmetrical. So right here would be a level of support right around 135, and right here, like we said, around 115. That would make a pretty good channel for this to go through for a little while before breaking out above the 135, 140 level and going back up here to 150 or 60. So this was about 2 years of making this base. We made the bottom, and then I would guess, a 1.5 to 2 years before we break out of 140. So I wouldn't be surprised if we went back down to the 115 level before making it all the way up to 135 or 140. You know, things never go in a straight line. So we'll see. We'll see whenever we break out of this little channel that we have between 125 and 130-ish. We'll see which direction it goes. All right, and then now down here in the bottom right-hand corner, we have the TLT. So this is kind of important here. If you look over to the right, this is another one that we've been in sort of a trading range between 136 or so and all the way up to 140 or so. We'd had this one spike back here up to 143, but that's pretty much it. Other than that, we've been in this trading range. And as you all know, bonds are very far extended, and they probably will be, given the state of the central banks, around the world. Rates are so low, if not negative, aka Japan and Germany. So today we broke out of that range. So this is pretty huge, and we broke out to the downside. So this leads us to indicate that the fall in stocks today was because of Fed fears, right? So if rates go up, the price of bonds goes down. So this down movement to 135 may be indicating that people are starting to believe that we may get an interest rate hike from the Fed in September or December. So where could we go from there? So from right here, we just gapped. We gapped down. The low back here was 136.99. So this gap, we could fill in this gap on Monday. The TLT could go back up to 137 or so, and I wouldn't be surprised. And at that point, I would consider selling the TLT for support down here around 132.50. That would be my short-term target. So, and you can short it, various ways. You can buy a put, you can short the TLT outright, or you can buy a spread to the downside. We talked about spreads last time, I guess maybe yesterday. So, but that would be my target, around 132.50, and that will be my target going forward, at least in the short term. And another thing to look at is the length of this channel, right? So this channel right here lasted from the end of June to now, so roughly 2 months. So look for the following move to sort of be concordant to that. Same thing goes for the S&P 500. We've been sort of saving up energy for the last 2 months. So a move like we had today is not super unexpected at the breakout. So we should see something in relative terms to the last 2 months, saving all that energy and then releasing it in this next move. So whether it's a move down to 205, we shall see. But it looks like it will be down to the downside. It just matters how fast it's going to be. And that sort of speaks to the level of the indicator that I was talking about last time. The positioning that I'm seeing is not a super strong downward movement positioning. So, and that may be coming shortly, but at least for this move, it'll probably be like a 5% move, something like that. At least that's what it looks like people are anticipating. But we'll see. Who knows? In any case, that's it for today. Hope you all enjoy the first weekend of the NFL. Have a great Sunday. Have a great weekend. And I'll talk to you next week. Alrighty. Bye-bye.